Good morning, good evening, good afternoon, trader Steve here at Logic FX Trading, and welcome to my second weekly analysis video. This is a free one. It goes out on YouTube for everyone and anything. It's a general overview of what I think is going to happen during the week, or at least what we should be focusing on, guys, so you know where to put your peeps as the week develops. We'll start by looking at the economic calendar, which will basically tell us what the big news stories of the week are. This is the ones that are, planned out. Obviously, there other things can come up during the week, surprise news stories. But for now, let's just run through this. Sunday, the 10th of March, that's today, guys. Fed Chair Powell speaks this evening. These times are all in GMT. So when I say this evening, it's this evening for the UK and anyone on that line down through Africa, as it would be. If you're in the United States, it'll probably be this afternoon or later in the evening, depending on what side of the United States you're in. Okay, so Powell speaking. Core retail sales Monday. Powell speaks again tomorrow night as well for the UK later in the evening. Be interesting to hear what he has to say vis-a-vis what happened with Europe last week, and we'll talk about that in a moment. Let's just continue through here. There's a few biggies this week, guys. GDP, the UK, manufacturing, production, GDP, three-month change. And then we have FOMC, Brainerd speaks. Here's the one I'm looking for, guys. UK Parliament vote on Brexit deal. This is going to be a big month for Brexit, guys. Therefore, a big month for the pound. At this point, no one can tell you which way it's going to go, but let's just understand what's up for grabs. There are three outcomes possible. One is that the UK crashes out on the 28th. The last day is the 28th of this month. So on the 29th of this month, I'm pretty sure those dates are right. It might be the 29th and the 30th, actually, guys. 29th and the 30th, sorry. I don't know where I got the 20th from. 29th and the 30th. So on that day, the UK is due to leave the EU. Now, there are three options. The first option is that they leave with the deal that the Prime Minister, Theresa May, has been working on, which was massively rejected last month. She's been trying to get some concessions out of the EU. They haven't really given her much, so I don't know if she's going to get that through or not. The second one would be that the Parliament on the next day, the second would be that they would crash out. In other words, they would just leave the EU with no trade deal in place whatsoever, or no mechanism for a trade deal in place. And that would be called the no Brexit deal. So they either leave with a deal, they leave with no deal. That will be voted on in the UK Parliament on Wednesday, tentative time, sometime during Wednesday. They'll vote on that. And that's basically to say, hey, are we going to crash out with no deal? Or do we go back to Europe and ask for more time to try and sort out some sort of deal? So that's the third option. So it's either they're going to crash out, either they're going to have a deal, or they're going to ask for an extension to see if they can sort out some sort of deal, guys. Wow. Listen, I'm not going to call it because I don't think anyone can really call it at this point. And therefore, what will happen to the pound is anybody's guess. Now, what will the market want to see to make it go up? Well, what they'll want to see is either the deal going through or them having this vote being passed, that they're not leave without a deal. And essentially, that's kind of like tying the hands of the government, tying the hands of Theresa May to say either, well, by this stage, they will have known whether they were going to pass that deal there or not. So if that hasn't been passed, and then they get this is a kind of a backstop for them, and where the Parliament says, hey, well, do you know what? We don't like your deal, but we don't want to leave without a deal. So kind of if they both work out, in other words, if the first one, if that one doesn't pass, then this one is going to be the biggie, which basically says, do we want to leave with no deal, or do we want to go back and talk to them again? If that one gets passed, then the market will love it, because they'll say, hey, they're going to have to go back and ask for an extension. They're going to have to try and work out a deal. And all the market wants to know is the UK going to get a deal? The only thing that will make the pound drop like a stone is if both of those fail. In other words, if that one doesn't pass, so they're not going to have May's deal, and that one doesn't pass, so there's not going to be any extension, then the UK is destined to drop out of the EU with no deal. If you see both of those lining up, guys, then watch the pound dropping like a stone. And it'll happen either on one of, you'll probably get a movement. If it's going to be a negative, guys, if there's a positive here, that gets passed, you'll see the pound taking off in the long direction. And if that doesn't, you'll see probably a slight movement, but then they'll all be waiting for this one. If this one, and I suspect this will be the big one, because I think that everybody knows that's not going to get passed. We don't know it, but we're pretty sure that that's not going to pass. So the big movement, I think, will come on this one, because if that vote comes out and they say, hey, listen, we mightn't be going with your deal, but we're definitely not leaving without a deal, we're going to go back to the EU and ask for extension, then the market will love that, and the pound will rise, guys. If that one fails, watch the pound drop like a stone. Okay, I hope you've got that. Okay, then annual budget release, summer forecast statement, and then the US durable goods. These obviously aren't as important. Crude oil inventories, important if you're trading oil. China industrial production, expected to be down, but if it dropped hugely, then obviously you would see a move there. What else is there? New home sales, Bank of Japan monetary policy statement, guys, and the interest rate decision. The policy is going to be more important than the interest rate decision, because they'll not move that. It's been there for a very long time. They'll not move that, but it's about what they're going to do going forward. Now, they already gave out some pretty stern statements last month that Japan realizes that their economy is, or their currency is, a safe haven. So there's going to be a slowdown in the world economy. A lot of people jump into the yen, not because they're trying to make any money off minus 0.1% interest rate, but because it's stable and it's safe. So if you're parking your money, you want it in cash because you want to try and take advantage of certain things. Park it into the yen, and you're not going to make any money, but you're also not going to lose any money. The problem with that is that would automatically push the yen up, which isn't what the Bank of Japan wants, because the stronger the yen gets, the worse it is for exports. They're trying to get their economy to grow. They're trying to get a 2% inflation rate. They're nowhere near it, guys. So what they came out last week or week before and said was that if the yen started to go up, they would take measures to stop it rising too much. Doesn't mean that we won't get a rise in it, but it'll not be as strong as what it possibly would have been had the Bank of Japan not come out and said that. And then obviously the press conference after that. Euro CPI, guys, there was a big move on Euro last week. Job openings in the US. These are all, that could have a little effect, guys, but the big story this week, overshadowing everything, is going to be Brexit. And the big story last week was the Euro, and we'll have a look at that in a moment, guys. Let's just quickly go over to Flipboard to see what I found interesting this week. And because we're looking at the pound stomach churning ride to get worse as Brexit vote looms, guys, you can go over to my Flipboard and read any of those you want. There's no point in me reading them out for you. I can tell you as we're going through what, well, we've already spoke at length about what that's going to be. Dollar going nowhere fast. That's important for us, guys. Global supply, not so important. Fed rate pauses, inflation rate stays. That's going to be linked to that story there, guys. Right. We're going to talk about that as well. That's what happened last week. The ECB surprise policy move sent shivers through the global stock markets. Okay. Short pound bets fade 3 weeks before Brexit. This is because the market's thinking, hang on a minute, they aren't going to let it drop out. They've got that safeguard of the second vote. Therefore, they're kind of hinting that they think that there isn't going to be a hard Brexit, therefore the pound will continue to rise, guys. I'm not so sure, and I don't think we had this up last week. Warren Buffett, the world's most successful investor. The best investment you can make is an investment in yourself. The more you learn, the more you'll earn, guys. Just a little thing there that I thought was important. Right, let's get on with it. Let's start with DXY and this move. Now, last week I went to great length to explain where we were in the cycle of this index, this dollar index. We'll not go through that again, guys, because I spent quite a lot of time in that last week. Suffice to say that the market expects the dollar to drop into this sort of region. This is the larger trend line. Let's just go out a little bit and show it to you guys. So we had this big move down. We're in a corrective structure at the minute, guys. We had this, it was actually a five-wave structure down. We're getting a 3, and we should get another 5 down, guys. Maybe it'll come to there. Maybe it'll only come to there. But we should get that. Notice I've pushed that further up. That was accidental, but nonetheless, it is something. To see the green line there, guys, that's where my target has been for quite a while. Now, let's go back down to the 4 hours. And what I said last week was, guys, yes, I do believe that the dollar will drop, but its timing's everything. And I don't think we're anywhere near the sort of timing for that to happen. Therefore, the dollar can only do one of two things. It will either continue in this sideways movement. Remember what, wait, let me just pause and get that up again. Okay, there's that story up again. The dollar going nowhere fast, and then Fed rate pause as inflation stays muted. Okay, so what that says is they reckon the dollar is going to stay in this sort of region, this zone, and it'll buy time until something happens that makes it, well, either break out the top or drop down. Now, the reason I brought in either break out the top is that what I said last week was I cannot see anything in the market that would make the dollar want to drop, guys. And at that time, price was there. And then we got this push right up, back up to previous highs. And we'll speak about why that happened in a moment. But the fact that that happened was kind of vindicated what I was saying, because the euro's the main thing that would have to pull the dollar down, because this index is made 50%, 7% of this index is balanced by the euro, is made up of the euro. Okay. And the euro is in the eurozone is in a mess, guys. Their economy's going sideways. It's going nowhere. There's talk of a recession, talk of definitely of a slowdown. And that's what ended up making this go up. If we look at the euro index, there's the result of last week. We had been going sideways yet again in the channel, and the euro broke out. It broke that low. That was the previous low, guys, and it's broken it. Now, it's recovered a little bit, but you know how these things move. I suspect there might be some more downside to that. If there is, then we'll see more upside to the dollar, guys, which could easily break that. Now, if it breaks that, I could see is going up, maybe not as high as that, but certainly up into that zone You know, you often get people talking about zones. I'm not going to say to you it's going to go exactly to there. It isn't, guys. It could do, but I don't think it will. But there is a possibility that will break out. What do we think for this week? Well, given that we had that big move last week, we're getting a correction of it. It will most likely give us a flat correction this week up in that region. I can't see any reason for it to drop deep down. It could do, but I suspect it's going to give us a sideways movement this week. Therefore, there's not necessarily going to be any great trades on within it. But do remember, we're on a 4-hour time scale here. So depending on what time scale that you do your trading, certainly if this was to come back up to there before dropping, before going, then, you know, there would be an opportunity there. But guys, the tighter that you trade, the harder it is to predict what's going to happen. That's why I trade on a higher time scale. We'll do the analysis here. And obviously on a weekly, daily basis, when we do our analysis in the trading room, we go right down to smaller time scales, guys, looking for setups and things. But your analysis, where you think things are going, where it's likely, where's the best place to get involved, you do that on a higher time scale, guys. So we've come back up to the top. That doesn't automatically mean, guys, that it's going to go back down to the bottom. Understand the reasons why it did that. And then you've got to say, well, why would it drop back down again? I suspect we could end up with one of those, guys. It could come down and back up and down and sideways up in that region as opposed to that sort of scale. But I do suspect there's more upside to it. Okay, let's get on to the reasons why we had that push up on the dollar. It actually wasn't a push up in the dollar. It was a push down on the euro, which came out in the index as that. And if you go over to the euro dollar, you can see there was the result of it. Last week we had our arrow in. There was a little setup there. If you got into that, you would have done very, very nicely. The big question now is, do you stay in it or do you get out again? If you're out, then fair enough. If you're still in it, it's one of those ones, guys. Get your stop to zero and then hope that this, you know, eventually drops out the bottom. Personally, I would have probably taken my money there because listen, the time to stay in a trade is whenever you catch it on a turn. And then you try and catch the full run. If you've only caught it from there, guys, take your profit as far as I'm concerned and then see how this goes. Can it do this? Well, it can. It can do whatever it wants, guys. I don't think that's likely. I think we're going to need another big push, another big reason for the dollar to go long again and this pair to go short. Therefore, it'll probably need some time before it would do it again, guys. Maybe you could even get a pullback like that before it goes. So, yeah, probably I would suggest that you take your profit. Now, let's get on to it. Why did the euro do that? Well, quick explanation. Interest rates in the Eurozone are 1.75%. Okay. Last time they had a decision, they came out and they said, well, listen, we're not going to increase interest rates. We don't see us being in a position to increase interest rates. Let's say that's the start of 2019. And that's 2020. Start of 2020. Okay, so around here, I can't remember the exact month. It might have been January or sometime like that, guys. Draghi came out and said, ECB came out and said, listen, we're not going to increase interest rates until possibly the end of the summer, into the autumn, the fall, as Americans call it, and possibly in there, if things were looking good, they might increase interest rates. He's now pushed that line out to, into this year somewhere. So in other words, for the whole of this year, he's not going to increase interest rates. So that's the first thing. The second thing is that whenever I hope I can remember. Yeah, we're doing all right here. LTRO, that's it. Whenever the financial crisis happened back at the end of the last decade, 2008, 2009, around there, money supplies dried up as banks all, closed the doors, as it were. Some of them were going bankrupt. called in their loans, and some of the European economies really crashed, and money had to be loaned out. So what the ECB said was, we'll set up this thing called long-term refinancing operation. Okay, pretty sure that's right. In the UK, they called it quantitative easing. In the US, I think they called it quantitative easing. In other words, they're printing money and loaning it out at very, very low interest rates. I think this one, okay, there was, we'll not get into the interest rates, but it was very low, okay. What he's now said is he's going to continue to do that. And now they call it targeted long-term refinancing operation, which basically is the same thing, except they're saying, well, we're going to tighten up the rules for it, or we're going to say, hey, this is for this particular problem or that particular problem. It's still the same thing, guys. It's quantitative easing. It's printing money. So for that reason, what it did was it told you that because he was going to do that, and he pushed that out to there, he being Draghi, his view is that there's going to be at least a slowdown and a possible recession. And this is his way of creating monetary policy that will lighten the load by having money supply, a supply of money. Okay, so what happened then was obviously people piled out of the euro. That pushed the DXY up in that fashion. And the reason that it happened was that people were kind of going, well, if he thinks there's going to be a recession and he's worried about it, which his policies show, then maybe we should be worried about a recession. And the market reacted. And by the way, I'm pretty sure they also reacted on yep, there you go, S&P. I've been calling that and calling it and calling it. There's a drop there in the, that's the UK index. Sorry, that was the S&P and the Dow Jones we looked at there. I'm so used to doing these with my traders that I don't need to tell them what we're looking at. So we had the pullback and the breakout on the UK. And to be honest, at this point, I said, guys, be careful. This could turn out to be, some sort of zigzag before continuing on. Why would it continue on if the rest of them's pulling back? Because these are a lot more undervalued, underpriced, should I say, than the US markets. Reason being, people have been frightened of Brexit. If a good result comes out this week, you'll see these taking off, guys. That's the FTSE 100. Other than that, everything else dropped. Here
are some results from a search.
Oh my goodness. Sorry, that's my phone just thinking I'm asking it a question. Hopefully I'll not talk to you again. Right, so that was a bit of that came from what Draghi was saying, guys. Now, not only that, we were expecting it on a technical level. We were expecting this. When you get a big move like that, guys, at some point you're going to get a correction, or it could be the start of the fall. And I spoke to you last week. I'm pretty sure I spoke to you last week, and I said, any move down, any breakdown here, and that's the Aussie. Let's go back to the Dow Jones. Gives a better idea. Any movement down here, for me, would have been worth getting involved in. And the reason being that there's a possibility that if there's a world recession, that we could get, it'll not necessarily move like that, guys, but we could certainly get a continuation of this corrective structure. In other words, it could drop, maybe come back up, maybe drop a bit more, maybe something like that. Might just go sideways for the rest of the year, sideways for the rest of the year. But I certainly do not see it breaking that top. I don't see it breaking that top, guys. And this could be the turning point for another drop. So if you're interested in trading the indexes, I would be looking to get in short in them, guys. It was actually an excellent opportunity this week on this lower time scale. There was a nice little pullback there, guys. And then a drop to get into it. Yes, it's coming back up at the moment. Get your stop to zero, guys, and see where it goes. That was all a result of Draghi or Draghi's policy as a result of what he's seen in the market, guys. Okay, so, right, DXY. What do you think? It's going to go sideways. Euro USD, what's going to happen? I think this week it's going to go sideways, guys. It's in a correction. Probably stay in it. If you're a purist and you want to start counting waves, you could possibly say, no, listen, for me, guys, if it's a 1, 2, 3, 4, 5, that's finished for me, and we're in a corrective structure. We have to see, is it going to be a zigzag? Maybe not as far as that. Well, certainly if that's the fourth wave, it could come back as far as there, but I doubt it. I don't see what's going to pull it back that far. Therefore, probably a flat. Flats buy time, whereas zigzags change price, guys. Okay, pound. We've had the same move in the pound. We were looking for the pound to go long, although I did say that I wouldn't trade the pound long against the dollar because I saw strength in the dollar. So that was actually a surprise, but you notice that it didn't pull down as much as what some of the other ones did, purely and simply because there was still some upside in the pound, guys. What's going to happen next? Well, probably something similar to this, except if there's good news comes out about the pound, you can see this taking off. But yet again, the pound against the dollar isn't necessarily the best trade to take, guys. Pick the pound against something that's a little bit weaker, like the euro, for example. But I don't tend to trade the euro dollar or the euro pound. Aussie, US. Well, you can see what we're looking at there. Yet again, a pullback and then a drop. That pullback's happened since I drew that. We were looking for a drop last week. The problem is that we didn't have a setup to get involved, unless you found a setup on a lower time scale. But that, we had a bit of a, no, we didn't have divergence on that. Oh, we did have divergence on that. No, we didn't. Sorry. So it's a running flat, guys, rather than an ending diagonal. With the ending diagonal, it'll come down, you'll get divergence, it'll pull up and probably go back into trend, unless you're getting a change of trend. So we didn't get that. We had to drop out the bottom. And by the way, I didn't expect much to happen with the euro last week. In fact, the market didn't expect much to happen. That's why when Draghi came out and said what he said, that the market really reacted to it, guys. So with the likes of this against the dollar, guys, it's very, very easy to see a channel, and each time you get to the bottom of the channel, say it's going to go back up. That's why I talk about fundamentals, because fundamentals will give you an idea of what's going on in the background, and therefore what would pull that up against the dollar. I'm not saying the Aussie can't go long, but to be honest, I don't see any upside to the Aussie at the moment anyway. I would say that's going to drop, guys, but it could go sideways this week. New Zealand, we've had a push up on New Zealand. Was that an ending diagonal? Let's go and look at it on a smaller time scale. I'll not do this a lot. There wasn't a huge divergence in there, guys, as that came down. Okay, let's just carry on. Let's leave that one out, guys, because I'm not 100% sure why that moved up. That moved up on Friday. Must have moved up on Friday evening. So there will be a reason behind it that I haven't come across yet. I wasn't expecting that. This is the first time I've looked at the chart since Friday afternoon, by the way. With the CAD, what we were looking at when we got that, we were looking for, as it came up there, we were looking for a correction back down, but it would have been because of a possible ending diagonal. As it turned out, it was a running flat, which then went off out the top. But when you get that sort of structure, you're always looking to see you're going to get a pullback down. The one proviso I would have said with this was that I don't tend, everyone has their own trading strategy, guys, but I've become a lot more cautious about which trades I actually take, or potential trades, should I say, because these are all potentials. A move like that, for me, if the trend is up, which I believe it is, I mean, the whole trend's up. We've had a correction, an actual very beautiful little zigzag down there. So the trend for me is still like that. Okay. Now, as we said, if the dollar goes sideways, this could hang around, going sideways for a while, but we can't predict that. But we had this break of trend. We had a pullback, which didn't come right down. Then we got a next move out. That was beautiful, guys. The problem with it is that from you're really looking for a little setup. If you didn't catch it there was nowhere else to get into it. Now, back to what I was saying about this particular structure. When you get something like that, I'm talking about before it pushed up, when it was like that, often it's an ending diagonal, and you'll get it, usually a 50% retracement before it continues on up. Guys, I wouldn't take a trade like that. Reason being, it's against trend. Trend's up that way. If trend had been the other way and you got to push up like that, an ending diagonal, certainly trade it down, because it could continue on down, break the bottom and run with trend. But that's not the situation we had there. So what I actually said last week was, if this breaks and comes down, wait for it to finish and then look for a trade there, guys. As it turned out, it pushed up. At the moment, it's going to correct back down or go sideways, so I don't see a trade in it. And just going back to that New Zealand, having said what I said, I suspect the trend in this is down rather than up, because of the strength of the dollar. So this is a situation where, if you kept an eye out on it this week, guys, and I don't know if it's going to give us an ending diagonal, but often when you get a push like that, you get an ending diagonal that looks something like that. It's a bit of a rubbish looking one, but you understand what an ending diagonal looks like, guys. You get an ending diagonal. There's an ending diagonal there, guys. Higher high, higher high. And then you'll see, if you go to the MACD, you'll see the divergence. You see the divergence there, guys? Okay. So that's on a higher time scale. But this could give us something like that with a divergence on the MACD, which means that you could potentially get a breakdown on this. Why would I take that one if I didn't take the other one? Because I believe that the trend of this is down. Having said that, I don't like the way it's been moving, but I'm just using that as an example. Yes, there's exactly what I've been talking about, guys. Ending diagonal, breakdown through the trend line. Nice setup. Obviously, you've got to look at it in a lower time scale and get your timing right, and that sort of thing. This isn't yet again one that I would take. Why? Because this is potentially a sideways correction. Can it correct all the way down? Yes, it can. Is it likely? No. Why? Because of the momentum. First of all, the trends in that direction. Then look at these two moves, guys. That doesn't look like something that's going to come right back down. That looks like something that's going to correct, perhaps in a flat, and then push on up again. So I wouldn't be trying to trade that down. And that's a very good example of what I was just trying to explain, guys. But as you can see, I haven't looked at the chart since Friday. So I wasn't aware Friday morning, I think, the last time I looked at the charts. Looked at all of the charts, should I say. Obviously, I'm looking at the charts that I'm trading. So there you have it. I wouldn't be trading that one down. But what I would do with this is wait for this to finish developing and then look to trade it up. It may end up giving us a flat correction, guys. I don't know if it would be that size. It'd probably be of that order of magnitude. So something maybe like that before it goes. Remember your Elliott wave rules, guys. The next correction, if it's going to go long, which I suspect it is, would have to be of the same order of magnitude as the previous one if this is all one structure. If this is all one structure, tell me this. If this is all one structure, one impulsive move up, then this correction has to be of that order of magnitude. It can't be a big one like that. Okay, US Swiss. Back down again, still in trend, guys. This could possibly go long from here. But you're going to have to wait. Listen, there isn't weakness in the Swiss at the minute. When we got that breakout on the Swiss, this is the Swiss index. I was looking to see, was it going to give us some sort of ABC correction? You can see that's it. This one isn't as obvious, but it's A, B, C. Sorry, an A, B. And where are we going to get a C that would come up and break that top? That's what we were looking for. It came up and then dropped back down again, guys. We're going to have to listen. The only thing with it is it hasn't broken that bottom. Well, it has, but not significantly. That could still be classed as a double bottom in my book. You know, if you were to get back out of this and it'd end up way up there, you would look at that and you say, well, there's a double bottom there. For purists, they might not call that a double bottom, but it is. It possibly is, should I say. Obviously, the Swiss can push on down from here, and then it turns out that it's nothing. So given that that's broken that bottom, then this is all the same, still the same structure, guys. And looking at it with that in tail, and you take that off, this looks to me like it's not going up, but it's going to continue to do that. Of course, the one thing that would push it up would be more signs of a global slowdown. Swiss is a safe haven, like the yen, like gold, like the dollar is actually as well, like silver. So if there's going to be a recession, those are the places to look for your opportunities, guys. China. It's continuing to go up, guys, but it's a bit corrective for me. Now, these structures, 90% of the time when you get something like that looks corrective, it'll go that way. Let's call it 80%. Because every now and again, they'll take off out in the opposite direction. So they start off like this, they look corrective, and then they take off in that direction there, guys. So there is the possibility of that, but given the structure that we've got so far, I certainly wouldn't be trying to trade that up. I was in a trade here on the break of this. It came back down. Once it got away, I got my stop to zero. It came back down, took me out, so I'm not in it. US yen. Well, there's what we were looking for last week. A pull back down into this trend. Now, the trend on this is difficult, guys, because we had that flash crash. So I've kind of just taken that as the trend and left that out. So listen, you could probably pull it up to there. But just for the sake of it, we're in a channel running up. We were doing this last week, and I kind of said, listen, guys, this could come back down to trend, and then it'll take off. And well, it's come back down to trend. Now we've got to see, is it going to go back up again, or is it just going to give us that, sideways movement before potentially going long? It would be very easy to say this, this needs to correct, which it probably does, but I'm just adding everything together, guys. I can't see the dollar making a big pullback like that. So you'd have to get that on the yen. Let's just measure that. Where do you measure it from? Let's measure it from there. Yeah, it's beyond the 61. The difficulty I have with this, guys, and what I'm looking at here is there was our bigger pullback. And the whole way down here, because we'd had this move up, the whole way down here, we were looking for a break, looking for a break. We finally got one long after I lost interest in it. But we finally got one. And now we're in the same process, guys. We've had an impulsive move. We're looking for a break. We're looking for a break. We're looking for a break. Haven't got it yet. but there is potential for it. Remembering that this week there is the policy statement and interest rate decision from BOJ. Maybe if they're not as dovish as they have been before, you might see something happening there. I'm going to listen. I would let that happen before I would bet on it. So I have a sneaking suspicion that there's no. I'm not going to call that one, guys. The structure says it should go long, but it doesn't have to. It could come right back down to here before breaking. So for this week, there's still potential downside, guys. Ultimately, it looks like it wants to climb away from this trend again. The problem being that at what point does the Bank of Japan jump in and start to take control of it, or try to take control of it, should we say? Does it have to get away up there somewhere, or is it if it starts to break into these regions, is that where they come out and say, hey, we don't like it this strong, we're going to do something, and therefore it goes down again? That's the thing that we don't know. What level would they jump in again at? If we go back, historically it's been away up there. So I suppose a move, let's go out to the daily. So I suppose a move, within this, and that's not a structure line, guys. That's just the previous high. That's just to let me know the previous high is. Certainly, I imagine that this could certainly move up within this without any major panic or major moves from the Bank of Japan. If it started to break up through there, I imagine you'd probably see the Bank of Japan saying, hey, no, we don't like it this strong. We're going to, whatever policy they're going to use, maybe they're going to print money, maybe they're going to buy things up. Okay, so no, that's a bit inconclusive, guys, but I would say there's probably some upside to that, but not yet. Therefore, is that going to suddenly come down and go up again? I don't think so. But the other thing I would say is that for me, when something's moved that far, because of the possibility of a correction, I would be very reluctant to get long into this at this stage, guys. Maybe back there somewhere. Listen, take that out of the equation. Because they really stuff up your analysis, guys, when you get those little flash crashes, is they're very difficult. Do you put them in? Do you leave them out? What do you do? I just ignore them, to be quite honest. They're a bit of an anomaly that happens, and I think they're computer generated. In other words, the trading that made that happen is computer generated, as opposed to a true reflection of the market. That's why I tend to ignore them. So, getting back down to the 4-hour, would you want to trade that up? Not necessarily, because I don't know that it's got a great distance to go before it would need to correct. Ruble. Okay, we called it long last week out of that correction. That's what we got. If you're in it, fantastic. But if you look at that, I'm not sure that I necessarily want to trade the ruble, guys. If you're in it, yet again, get your stop to zero and then hope that it just keeps going up. That's nuts. How you need a great deal of luck to actually be able to make any money out of that. If you happen to get into that and rode it down, then you'd have done really well for yourself. But given how it moves, most of the time, quite difficult to trade. Oh, where were we? Turkey. Okay, what we were looking for was ending diagonal and correction down. That's what we got. I wouldn't bother trading it down for all the same reasons that we said last week, although I did have an arrow on it last week. But for all the same reasons, not that we said last week, but I said earlier, I suspect the trend is still up. Therefore, this will not come down all that far. It may do, but the probability is that it won't. Therefore, for me, it's not a great target. South African Rand, okay. The one thing about the South African Rand was that we were thinking if the dollar was going to drop, because remember, a lot of people were saying the dollar was going to drop. When we got this, yet again, this looks long, but there is the possibility that these things drop out the bottom and come down. There was going to be a double whammy. And it was that if the dollar dropped, and remember that South Africa produces a lot of, gold for a start, but other commodities, they would get more dollars for their their produce, which is good, obviously, for the economy. So they'd get a double hit. First of all, if the dollar dropped, then price would move that way anyway. And then secondly, they're going to get an extra hit because they're going to earn more dollars. So this could well have come down to here. That was the reasoning last week that I said, listen, depending on what way the dollar goes, of course, the double whammy went the other way as well, because the dollar strengthened up, and therefore they're not getting as many dollars for gold, because as you know, if the dollar goes that way, chances are gold goes the other way. It's not a direct correlation, but it is part of the main mover of gold and silver and commodities is supply and demand. But because they're priced in dollars, guys, obviously dollar movement can affect the price as well. So if you look at gold, it dropped the way down. We've had a pullback on Friday, but what I was saying last week was we were potentially in a 5-wave structure. I was expecting a pullback up here before a drop, not necessarily all the way to that trend line, but certainly down. That's a bit of a surprise because it's come up so much. But having said that, if you look at the previous push down, it's pretty impulsive, guys. So this is correcting that. I would not go long on this unless you get a decent setup for it. Okay, decent setup for it, because this could easily put in a 5th wave, guys, and then you're looking to see, is it going to climb back up in that sort of fashion. This, for me, looks like a correction. The only problem is, at the moment, listen, I was going to say, at the moment, it looks potentially like a 5, but is it a 3? The reason I don't like calling it a 3, guys, is because that, compared to that, is way out of balance. Now, they don't always have to be beautifully balanced, but generally speaking, for a 3, you're looking for something that looks like that, guys, and that's completely out of wonk. It's wonky. So for me, this looks like the start of a 5-wave move down. The problem then you have is that any 5-wave in an A position, which is what this would be, if that's what it is, isn't finished. Therefore, you get a push down, you get a push back up, another push down before gold starts to go long. That's a possibility, guys. Don't be worrying about it. Worry about this next move. But if it does that and we get to here and it starts to look short, then we might say, hey, guys, we could get another 5-wave down before it goes. That's the beauty of Elliott wave, guys, is that you know long before anything happens that if that happens, there's a possibility so you can protect yourself. Not necessarily trade it down, but certainly protect yourself by tightening your stops in case that becomes a reality. So what do you think for this? Well, I think taking that structure on its own, I think it needs to drop. Taking the fact that the dollar is correcting at the moment, in other words, getting weaker, that should boost this. So there's no setup to get involved in this at the moment, guys. So I wouldn't necessarily want to trade that up. If you're in it, get your stop to 0 and then see what happens. If it comes back down again, so be it, you haven't lost any money. And if it pushes on up, you're into a nice trade from a good spot. Then we watch to see what it looks like. And if it looks like it wants to drop again, then you can take your profit there. But if it takes off, you know, like that, then obviously you stay in. And then C, is it going to give you an A, B, C, like that before it continues on up? I suspect, listen, last week I was hemming and hawing about whether we were going to have a recession or not, or whether we were just having a slowdown. And I was kind of saying, you know, I'm not so sure about my previous conviction was that gold was going to break these tops and move up into this sort of region. Let me have a look at it. It's going to break out of that channel that it's been in there and going to push up from here, guys. We're not going to start saying it's going to come to there or there. Take it one step at a time, guys. Certainly up into this sort of region was where I was looking for gold to go. Then they were saying, hold on, there was the green shoots of recovery and blah, blah, blah. Goldman Sachs, I think it was, come out with that. The story's changed again after Draghi did what he did, guys. Because Draghi's a player as opposed to Goldman Sachs, who are observers. So I would take a player's opinion of what's happening over an observer's opinion. So I suspect that gold's going to continue to climb on up. And if it does, then obviously silver will do the same thing, guys. Back to our silver chart. Let's get down to the 4-hour time scale. Possibly a bit of an ending diagonal there before it came. I traded that up, got out of this right near the top, guys. As it started to come back down within that hour, I got out of it. Tried to trade it down, got stopped out, and then missed the big move. Unfortunately, missed the big move. But there you go. What next? Same as for gold, guys. I suspect it's going to push down a bit before it goes long. Could happen here, but then you'd have to look for a setup in order to trade it up. If you don't get that, if you don't get, listen, the trend lines are arbitrary, guys. We draw them in to show, give us an idea of what's happening. You don't have to wait for it to break that trend line. If you were to get a setup here, and I'll zoom in, if you were to get a setup here and it started to break long, well, then there is a possibility that this is going to continue on long, guys. And I would take that if you got that. But I suspect this is going to start to drop. And I'm not sure they'd want to continue trading it down because I think it'll just be a fifth wave. Where should a fifth wave come to? Don't want to give you too much away here, guys. Around about there. That's where I would put a target for the fifth wave. Do I want to trade that? No, because it's not a certainty. Okay. Although there's nothing in trading that's a certainty, guys, but there are things that are highly probable. Unless it's highly probable, I'm not going to waste my money on it. I've learned that over the years. Okay. Right. So where were we? South African rand, gold, silver, oil. Okay, oil's going sideways, guys. I was trying to trade it down and I got stopped out a couple of times. Was it this week? Yeah, it was this week. Tried to trade this down. Let me just try and get my bearings here. Oh, here, that. There's where I got stopped out, guys. It's something like that. It came back on a 1 hour time scale with a little pullback there, and I thought, oh, here we go. This is going to drop now, guys. It dropped. It was on the announcement of the oil inventories in the US at the time. And then the market said, no, hold on a minute. And it came right back up and took me out. Horrible. Horrible, horrible, horrible. But then that's trading. So price come on up and then it broke. And it dropped, and now it's coming back up again. So yet again, unless you took your profit down here somewhere, in all likelihood, you're very close to getting stopped out. Nonetheless, I hold by this I still think the oil price is going to go down. Reason being, for the meantime, and it could go down like that. It could go down in a diagonal, guys. It doesn't have to, shoot off. That's when we get lucky, when prices do that. But when they do that, then we're just in a bad trade, guys, because you're not going to make any money on it. You're just going to keep getting stopped out. But we don't know, therefore we have to take our chances. But I still think this is going to come down based on everything that was said last week. Words can end a recession or a slowdown. You have to be careful with that recession word. Okay, well, you can see by that what I was looking for last week. It's pushed on down. That was based on the push down in the euro. Hasn't broken any records yet, but I would expect some sort of pullback in the euro, and then maybe you get another trade in down there, guys. If you don't get the setup, then don't trade it. Euro was, you can see what I'm looking at there. Same thing, guys. We've had to push down. If you're not in it, you've got to wait for some sort of decent pullback to get into it. Let's just race through these now. Euro CAD. CAD's showing a little bit of, well, hold on, not necessarily. That was the push down in the euro. That line is quite tentative, guys. I wouldn't bother with this one until we get a better idea of what's going on with the CAD. Let's just have a look at the CAD. CAD's dropping. Okay. So if the euro's dropping, the CAD's dropping. You don't want to trade them with each other. Just a quick one while we're on that, guys. I don't know if any of you did vectors in school in mathematics, where that represents a force. And if you have a force acting that way, then there's your resultant force, because that's cancelling out that. But if you have a force like that, and then you add another force like that to it, then your resultant is double, if you understand what I'm saying. So if you're trading a currency that's going long, and you're trading it against a currency that's going long, then you're going to end up with a zero. If you take that away from that, and you end up with zero. But if you're trading a currency that's going long against a currency that's going short, then you get a double whammy. In other words, you add that to that, and there's, sorry, the vector thing isn't a great example. I'll just talk myself down a dark alley there, guys. What I'm basically saying is you're trying to trade a currency that's going long against the currency that's going short. So you get a double whammy, as opposed to trying to trade two that are going short or two that are going long. So you look, so if the dollar's going long, look for something that's dropping. So you'll get a double whammy. Don't trade it against something that's also climbing. Okay, I hope you got that. Right, let's clean that up and then move on. Where are we? Oh, CAD. So we're on the EuroCAD. Right, EuroCAD. Right, so what I'm saying there is the euro's looking weak, the CAD's looking weak. Don't bother with them, guys. Euro yen, there was the drop in the euro. If we were to get a push up on the yen, and we're not sure, we just looked at the chart, we're not sure, but if we were to get a push up in the yen, we could possibly get some sort of setup here and then a breakout of this, pushing back down towards those previous lows. I'm not convinced of that, guys. Last week we were actually looking on this and saying that this could possibly push up. But yet again, I'm pretty sure, I don't know if I said it to you guys or whether I said it to my own traders, but I remember looking at this, putting that alarm line on and saying, guys, this could go long. Wait for the break and the setup. I'll not be trading it because I just didn't like it. As it turned out, because of what Draghi said, the euro dropped like a stone, guys. Is there now a trend line on there? Possibly. Let's take that out of the way. Let's put that down there. Same story, guys. I don't know. If this were to start to climb up, then potentially you trade it there. I'll not be trading it. because it could obviously do the opposite as well. So I would leave that one alone. Euro Turkey is just continuing on up. We had that on last week. I must have reset it because you can see it hasn't gone off, but it would have gone off. We had the push up, we've had a pull back. I would say that's going to go long again. Do you want to trade it? I wouldn't trade it because with the weakness in the euro, this could easily correct deeper, guys, before going long. So I wouldn't trade that. Euro Swiss, well, just leave that alone, guys. You don't want to be involved in something like that. Pound Oz, okay, right. Last week we were here, and I remember putting that chart out. And I basically said, guys, we're going to push up from here, pull back, and push on up. Because the RBA has been quite dovish and because possible positive Brexit. As it is, it pushed up and then decided, we're coming back down again. That doesn't mean that that thing there isn't still valid. And I'll tell you why. Because obviously you can't get these things bang on correct. The market's not going to follow your arrows. But the idea was it would go up, it would correct back down. Look, where I've said it would correct back down to, back into where it started before it would go. It's gone up, didn't go as far as we thought. It's come back down again, but I still think it'll climb, provided things go well in the UK Parliament. That's what that was based on, guys. If it doesn't go well, you'll see the exact opposite happening, and you'll see this crashing down. But you need a setup. You might not get one because if it goes pear-shaped, this could just take off, guys. And at the moment, given what happened, do you know what the optimism was last week, guys? The reason I thought that was going to go long, the UK Attorney General had gone over to Europe to discuss the backstop. And if you don't understand it, don't be worrying about it, guys. It's all going to kick off this week. Too late to start to explain it to you. And he came back with his tail between his legs as the Europeans said, listen, we're not changing that. And just to give you a bit more information on it, the EU do not want the UK leaving the EU. Therefore, they're making it as difficult as possible. They're not going to try and work out a trade deal with them. They're gambling, and it's like a card game, guys. And they're basically saying, we can't afford to lose the UK out of this game. We want them to stay in the game. Therefore, we're not going to do anything to make it easy for them to leave the game. Okay? So it's a bit like being in a card game, you know, the old Wild West card games, and you've won a lot of money and you want to leave, and the guy pulls his gun and says, where do you think you're going? Where do you think you're going? You're not leaving the game. I want a chance to win the money back. So obviously it's a bit of an analogy, but the point is the EU does not want the UK to leave, so they're not making it easy for them. And they're hoping, because the vote was so close, I think it was 49% to 51 or something along those lines, the EU, the vote was so close that the EU basically got it in their heads. They said, well, if we make it difficult for them to leave, a lot of people will panic about a no-deal Brexit, and therefore they'll cave. Are human beings really that naive? What I think has happened is people become intransigent in the UK and said, we want to leave, we don't care about the economy. Do you understand what I'm saying? Nationalism is more important to a lot of people than finances. The finances will recover, but if you lose your nation, you've lost your nation forever. That's the mindset that's going through. I'm not saying it's right, but it is a human thing, guys. We all, no matter how liberal we are, we all have a little thing in the back of our minds. This is my family, this is my tribe, this is my nation. And there's a lot of that going on in the UK at the moment. So the idea that they'll not leave, I don't think they will not leave. I think they will leave. But possibly there'll be a delay and some sort of deal. Okay. Pound, Swiss, same thing. We're getting a pullback. This could be one of these ones that will go either direction, given that the Swiss has been getting weak, guys. If the pound were to go strong, you'll see that happening. If the deal goes bad, you'll see the opposite happening. All comes down to the deal, never mind the structure, guys. Pound euro, same thing. That was the push up on the euro, and then the pound came back down again. That had to be the pound coming back down again. Reason being the big vote next week. Brexit's overruling. Brexit's trumping everything, all economic policy. Pound yen, same thing, being pulled down by the pound being weak rather than the yen. That one's actually quite an interesting one because look at that strength. Didn't push up against the yen. Oh, sorry, it was the euro that pushed up and then the pound pulled it back down again. Hard one to call, guys. Hard one to call. It'll go in one or two directions. At this stage, nobody knows. Same thing there, guys. We were looking for it to break long, and then because the Attorney General come back with his tail between his legs, it's dropped. So this move that we see here is all to do with the pound, nothing to do with the other currencies, guys, because even the CAD, it's even dropped against the CAD. But there was my arrow. We've had a pullback, potential little ending diagonal there. There you go. Although I wouldn't have jumped in where that went, but maybe in a 1 hour time scale. No, don't like the look of that even. Oh, there was a little setup there. Well, guys, if you look at it, this isn't really any different than what we've had. A push up, pull back down, a push up, a pull back down, a push up. So potentially we're just getting a pull back down. But I think we're going to get a big move in the pound this week, guys. Okay. Pound New Zealand, same thing, guys. We were looking for it to go long with optimism on Brexit, and the markets got scared and pulled it back down again, guys. Yet again, it'll go either direction. Tomorrow, the vote's tomorrow, guys. It'll move tomorrow. It'll move in either direction. And to be quite honest, I'll not be trading it. Because it could go one direction, then go off in the other direction as the market works out what the result means. And then obviously the second vote the next day. So be very, very careful of trading it, guys. You'll either get stopped out very, very quickly, or you'll be in a really good trade. So, okay, South African Rand, yet again, we did get the push up in the Rand. Now we're getting a pull back. Just leave it, guys. It's either going to crash down or it's going to push up. Aussie yen, back to stability. It's going sideways. For me, there's not a lot to talk about there. Is that a channel there? Let's have a look. Well, let's put it parallel just in case. Don't see any strength in the Aussie. At the moment, the yen is hanging around as we looked. So this will hang around for a while, guys, I suspect. But if we got some push up on the yen, then you can see that happening. Okay. Aussie, New Zealand. I've been looking for this to go long for a long, long time, guys, basically because the way this pair moves, and I did mention this last week, the way this pair moves, if you go out to daily, it goes up, it comes back down, goes up, goes back down, goes up, goes back down. If you catch it on a turn and you're brave enough to stay in it, you could well catch a move, something like that, guys. So that's what I'm after. Is it going to happen right now? I have no idea. This could just continue going for a while before it happens. The problem is with getting involved in that is that we've already had quite a move down, and I'm just drawing that. I'm ignoring that flash crash, by the way. I'm just drawing that, and I'm saying there's potentially a 1, 2, 3, 4, 5 down there. Do you really want to bet on the 5 extending much further? I wouldn't do that. Therefore, I'm looking just based on structure, guys, based on what happens with this pair over and over again. I'm looking for a long on Aussie, get into it and hope that you've caught the bottom, and then have the bravery to stay in it as it does whatever it's going to do over the next lot of weeks and months. But there's loads of time. Remember, this is a daily time scale. Loads of time to analyze that on a weekly basis and a daily basis and see whether it's going to be what we think it is. So at the moment, that's what we're looking for. When it happens, when it's going to happen, I have no idea. Aussie CAD. Okay, when we got that, I said it was going to drop. I expected it to come right down because trend was in that direction. As it is, it's hanging around up here. It's come down, back up, down, back up. For me, it still looks short. Look at that last push up compared with that one, guys. It's just a bigger ending diagonal for me. So it's running out of puff. You could even, no, I wouldn't say, I was nearly going to say, you could say it's a head and shoulders, but it isn't really, guys. And I don't trade head and shoulders anyway, guys. I just know that a lot of you talk about them. Yeah, it's not a head and shoulders. Well, I don't think there's any such thing as a head and shoulders. We're looking here to see, is this going to drop? And I suspect it is, based on structure. Neither of the two are showing much strength. Therefore, it's probably a good idea not to trade it. Aussie Swiss going sideways. Going sideways, but I would suggest, no, wouldn't suggest anything. Leave it alone. Swiss yen. Oh, this was the trade I put out last week. Yes, it was going to drop, but we still expect it to go long. Came down, I caught the trade down, got out of it, and then it made another move. What's happening now? Well, obviously our structure lines are all wrong now. Okay, I'm not going to start trying to analyze that at the moment, guys. We don't have time. But it's dropped an awful lot very quickly, guys. Is it going to drop anymore? I'm looking for some strength. No, we're looking for the Swiss. These are both, the reason I'm hemming in hand, guys, is that both of these are safe havens. So if the world economy is going to slow down, if people are going to run to safety, and it's not happening yet, but if it happens, then both of these will go long. And if they both go long, then there's no point in trading them because it's not predictable. At the moment, the yen looks as though against the Swiss it's going long, and the Swiss has been going short, but the long is stronger than the short. Therefore, sorry, yes. That's gone long and that's gone short. Back to my vectors again, guys. Therefore, you've had this really nice push down. Leave it. I have no idea what's going on with that, or not what's going on, but what's going to happen next. CAD yen, there's another one. It had come down into here, and we thought, well, let's see if this is going to go. There's the strength in the yen. Going back to the yen, unless we see it doing that, I can't see any continuation of strength in it. Because it's still in this, because the last time it came up, it could well drop again, guys. If it were down into this region, I would be saying, hey, guys, we're looking for this to go. Can it go here? Yes, it can, but I'd be happier with it if it was down there. Okay, so what I'm saying is I suspect this could well fall before going long. Therefore, this week, I don't necessarily see this dropping anymore. So I'm going to take that off because I just said I don't think it'll do that. I would leave this alone at the minute. It's come a long way, guys. The only way to get involved in this again would be either it's coming up and we redraw our trend line. Obviously, let's just do it. Let's do it. Let's try and put some sort of trend line in this. You can see how it's so difficult, guys, because it's really steep. If that were a thing, and I'm not saying it is, in fact it isn't, let's just leave it where it is. To get short in this, if you thought this was going to go short, is that a thing? Guys, it needs to get out of that before we're going to know what's going to happen next. This isn't giving us a clue. If you were to get into this, the thing could just finish and then start to pull back up again. So it's not a place to get involved in a trade. Let it just develop and we'll get a better idea. If we were to get some sort of pullback, maybe like that, then we could maybe say, hey, it's going to drop again. Or if it were to start pushing up and give us a pullback, we might say it's going to do that. But as it is, it's not doing any of those things. I would just leave it alone. Sorry it took me so long to come to that conclusion, but for now, we don't have enough information. New Zealand yen. Well, yet again, guys, we have been looking for this to push back up because it's been in that trend. I would say that's a possibility, but I'm not overly excited about it. New Zealand CAD, same thing. The whole thing's just been going sideways for a long time. Every now and again, you get a little opportunity to get involved in it. Seems to end with ending diagonals, certainly the last two times, possibly even there. Is this there? We're getting bump, 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 possible ending diagonal. I would say that there's a possibility that that's going to drop and come back down again based on structure, nothing else. New Zealand Swiss. Yeah. Not sure about that, guys. That was based on the Swiss strengthening up. We're not sure if it's going to do that or not. CAD Swiss, same thing. That was based on the Swiss strengthening up. It's dropped back since then. What we were looking for here, I'm pretty sure. That's horrible, guys. Just stay away from that. There's nothing to trade there. And the yen, South African rand, possibly a continuation down. We're looking for a pullback and then a drop. We're starting getting the pullback. Get a trend line on there. That wasn't our initial alarm line. Put the alarm line there. You're looking for a pullback. Take this on its own. Don't know if it'll come all that way. Looking for a pullback and then a drop. Yet again, I don't know if this is a place that I'd want to get involved, guys. There's where I'd have preferred to get involved. We have had a big push up and you're going to get a correction off it. Not halfway in the move. Unless you think that's everything. And there is a possibility, now that I look at it, that that's, that's a correction. We're going to get a breakout. But it's whether that's finished or not. So then you've got to wait and see how this develops. And if it gives us a good long and a setup, and you go and check and see what's happening with the rest of the rand pairs, go and see what's happening with the yen. If you were to get that, then possibly you could trade it up. But for me at the moment, there's nothing there. And we've already looked at all of these. I'm saying that these are all going to go short. Of course, it could pull back before they go. So that's potentially somewhere to look for some decent trades. I'll put a few charts out based on these as the week develops, guys. But the biggest story in town this week is Brexit. Whether we'll be able to trade it or not is another thing, guys, because you might not have a setup to get involved and it could go up and then down again. So it's a dangerous one, but it's going to be interesting. Okay, I hope this helps. I'll speak to you again next week. Bye for now.